Welcome to the BF Anderson Market Report for May the 11th. Let's start out with the graph, the long-term graph here, which is the 10-month moving average versus the 20-month moving average. You can see we're on a buy signal. S&P is looking really good on a monthly basis. We went through that really extensive sideways and down area here for the last 3 years, but realize here that, after a bad market usually comes an easy market. After a bad market comes an easy market. So basically this graph is showing that we are on a long-term uptrend. Let's get on down to the speedometers. Here's the hit ratio. We're currently at 100% hit ratio. We had minor turnover last week. Now, let me explain turnover. There's a lot of reasons to buy and sell, and sometimes it's because of bad earnings reports. But I'd like to touch on the subject real quickly of market capitalization. When you've got a company like an Apple that's $800 billion in market cap, it's very difficult for me to see how that's going to appreciate substantially, and I'm talking double or 10 times or whatever, simply because the market capitalization is so large. So in this last week, we went ahead and sold a very large cap stock and replaced it with a smaller company that was about $5 billion in size, where the company we sold was about $400 billion. Now, the trend following indicator continues to be in the bullish camp. However, we are seeing some mediocre activity in the small caps and the mid caps. The domination here is definitely the NASDAQ. The NASDAQ is making new highs. Now, on this particular indicator, which is sentiment. Now, sentiment is a very important indicator. In fact, I would rank it up there as one of the most important indicators that you can be aware of. This calculation is done by CNN, and it's a good one, and I like it. But at the same time, I really think the best way to measure sentiment is by just looking around you, talking to people. If you go to a party and people are really talking a lot about the stock market, you need to make note of that. But I can tell you right now, from my experience, nobody's talking about the stock market. Sentiment is, as a result, sentiment is very, very positive. When everybody thinks that the market will never go down is when you really should be getting cautious. Now, in this latest week, we saw the 10-year Treasury get back up around 2.4%. So with interest rates rising and bonds dropping, you can see why this indicator, which uses that as part of its calculation, has moved to 61% or greed. Now, the top five, let's take a minute and look at the top five. Now, the way we do this is we purchase a filter from a group out of Salem, Massachusetts. And what I then do is I take the top 5 performing stocks of that filter. Now, you have to understand the filter. The filter starts out with 5 to 10,000 stocks. We bring it on down to about 100 stocks. Now, this is approximate. And the purpose of the filter is just to narrow down on the strongest areas of the economy. Now, what I find interesting is the stock market is kind of like a jigsaw puzzle. I mean, you're looking for clues, and the purpose of the top 5 is to try to get us in the right area. Now, if we were seeing like a lot of oil stocks in here or a lot of retail stocks in here, then we need to be paying attention to that. But I don't know why this is, but in the second half of decade seems to be where these technology trends start to unfold. For example, in the 1950s, the big trend that unfolded was solid rocket fuel. A company called Thiokol invented rocket fuel during the Sputnik situation. In the 1960s, the second half of the decade is when Xerox came on, which was xerography. In the second half of the 70s, it was IBM that came on, which was why Walmart was so successful. So that technology came on, which was mainframe computers. In the 1980s, around 1986, is when Microsoft came on, and Dell Computer, Compaq Computer, Intel. It was the personal computer in the 80s. In the 90s, around 1995, 1996, Cisco Systems came along. Then Amazon came along in 97. So the big boom in the dot-com stocks came in the second half of the decade. Then we get to 2000, and in 2006 was when the iPhone was launched. So we saw Apple dominate, mobile smartphones dominate in the second half of that decade. So here we are, it's 2017. What do we think it is? Well, it's quite clear to me that we're seeing a lot of technology stocks that are doing quite well. In semiconductors, for example, semiconductors used to just go into PCs. Now they're going into everything. I mean, there's going to be the Internet of Things out there where everything has to have semiconductors. Then if you look at things like Tesla, we're talking about an automobile company that is really more of a technology company. Universal Display makes components for the iPhone and television sets and so forth. Lam Research makes semiconductors, or the equipment to make semiconductors. So the primary trend that we're seeing right now has to do with cloud-based softwares, where the best example would be Netflix, where this company has tens of thousands of movies that are available to you on your mobile device simply because they have a server farm that is in the clouds at a server farm that is able to download this data to you. We see this as a really important trend right now, and could be what is going to be looked back upon as being the primary trend of the second half of this decade. So if you have any questions, give me a call. Lots going on. Let me know. Thank you.